Frequently asked questions, 1031 exchange formats and variations. Section 1031 of the Tax Code provides a mechanism where taxpayers can defer capital gain taxes. And there are a number of different 1031 exchange formats that a taxpayer can take advantage of to accomplish that. What I want to do is review some of these with you and then also provide some insights as to what we see happening now in the marketplace. With that said, one option is what is called a two-party trade. More commonly, that could be referred to as a swap of properties. Party A has a property, Party B has a property, and those two taxpayers merely swap properties. Party A receives Party B's property, Party B receives Party A's property. This is the first and earliest form of a 1031 exchange, and these happen commonly when the code first came about. They're fairly rare today. It's very challenging to find two parties, two investment property owners, that have property that they each want of each other's at the same point in time and where their equity and debt line up so they can both obtain full tax deferral. So this is a variation that's possible, but we don't see it happening very much at all in the marketplace. The next variation is what's called a three-party format. This can be referred to as an Alderson format or a Baird format. The Alderson came about back in 1963. In a three-party format, you have what is known as an accommodating party. And the accommodating party is there in the middle, and they actually take title to another property and transfer that to the taxpayer wanting 1031 tax deferral. The reason why I'll cover this fairly quickly is even though it became a viable option back in 1963, it really isn't used today at all because of the risks. There's considerable liability to that accommodating party because they actually have to acquire somebody else's property that they know nothing about. And so these, even though this is a variation, we don't see them used in the marketplace. Far and away, the most common exchange format today is the delayed exchange with a qualified intermediary, sometimes also referred to as a QI. This is a transaction where a taxpayer sells the relinquished property, is sold to a buyer that's unrelated, and then they purchase from a separate seller a replacement property. There's a timeline, and we'll get into this in more detail in a later segment, but a taxpayer has up to 45 days, calendar days, to identify a potential replacement property or properties, and a maximum of 180 days to potentially complete a delayed exchange. So as you can see, the delayed exchange gives taxpayers considerably more flexibility on the timing and on the types of properties that they could acquire. The next three variations are all variations of what is known as a parking arrangement transaction. These are situations where the qualified intermediary, or more commonly an entity owned by the qualified intermediary, referred to as an exchange accommodation title holder, and these are generally entities called a special purpose entity, an SPE, set up to accomplish these exchanges. They're typically limited liability companies formed in the state where the property is parked. In a reverse exchange, this is a parking arrangement where the replacement property is acquired before the relinquished property is sold. An improvement exchange is one where the taxpayer makes improvements to a replacement property, and that could be building from the ground up, or it could be making refurbishments to an existing property. And then finally, the last parking arrangement transaction is what's referred to as a reverse improvement exchange. This is one where the taxpayer is going to acquire the replacement property first, begin making improvements to that property, and then later selling the relinquished property. And it's not uncommon to see business owners, owner users that maybe have an ongoing business where they want to expand, taking advantage of this structure where they're going to be building a new building that's maybe larger or maybe it's located in a more desirable location, but they've got to keep their existing business going. So those three, the reverse exchange, improvement exchange, and reverse improvement exchange, all fit under the category of a parking arrangement transaction. To review your specific 1031 exchange situation, contact Asset Preservation's headquarters in California at 800 282 1031 or our Eastern Regional Office in New York at 866 394 1031. Please read the full disclaimer, as Asset Preservation cannot provide tax or legal advice.